a lot of the discussion today has been around banking API, open banking, consumers. And today, for the next 35, 40 minutes, what we're going to chat a little bit about is let's start bringing in the business to business or the back office, and how is that making an impact on fintech and partnerships with banking. And just a little bit of background on me, and then I'll hand it over to the panel to do some introductions. I was with a fintech that you've probably heard of, and maybe we're in their building today, for about 12 and a half years. And a lot of partnerships, a lot of experience with banks, with fintech, with back office processes. And it's a pleasure to be able to moderate and introduce Tommy, Jordan, and Jason. So if each of you want to do a quick intro, we'll jump right in.
Thanks, Jay. Tommy Marshall, I'm the FinTech lead for Accenture for North America. I am a Charlotte native, so it is. I love being part of this event. This is the second year I've been here. I'm also a Davidson alum, so go Wildcats and go Warriors. I at Accenture, we have what we call our FinTech Innovation Labs. We have one in New York, London, and Hong Kong. And over the last 8 years, we've graduated 120 fintech companies from those labs. Part of my job is to work with the alums of that program and look to find business problems that our clients have and see where we can help our clients address those problems through affiliations or engagement of those fintechs. I also spend time with emerging technologies, blockchain, artificial intelligence, from both a fintech standpoint and also where we can do development to address, again, business challenges our clients are facing. Thanks.
Jordan Bettman, I'm the founder of Radian Capital. We're a growth equity fund based in New York. We specifically target companies actually outside of New York and San Francisco. So we look to write $10 to $20 million investment checks into companies going through an expansion stage of their business, and we focus exclusively on B2B. I have two other partners that look at other areas, so as a fund we have diversification, but for myself, I've spent the last 12 years focused on financial services and financial technology investing, including before starting Radian, I was a partner at Bain Capital Ventures and was fortunate to be part of the team that actually led the original investment in Avid when this was just a dream, this building, and the company was maybe 100 people, 150 people. So it's been pretty amazing to see. But again, kind of exclusively over the last 12 years focused on B2B because I'm not smart enough or cool enough to look at consumer. But I also think it's a very different world. And I think a lot of what we'll talk about on the B2B side is you and your role at a company is no different than you as an individual. You've come to expect a certain level of product and services, regardless of what you're doing. And the same definitely applies to the CFO offices at companies, small and large. And so where fintech starts and ends as sort of innovators and disruptors versus banks, that's very much gray area, but it all with an eye towards how do you continue to service and delight the customers, again, kind of regardless of size, to make sure they're getting the experience that they want.
And I'm Jason Malo. I actually am a board member on the Finsiders team, which is how I've come to be part of this. And actually, I have to say, I was reminiscing with some folks earlier and just thinking about how like Aubrey and Dan and Jay and Rami, like we would sit at one of the tables at OMB and just sort of talk about this thing like 3 years ago. I literally had chills down my spine when I came in here. It's amazing to see this, and we only can hope it can go and continue to grow. But so I'm not really intending to be totally cryptic with the way that I announce myself, but I'm also an analyst for a relatively well-known firm who doesn't know that I'm here today.
Wow. That's cryptic.
So if you go, so not that it's necessarily frowned upon, but I work.
And that's Jason with an M.
An M-A-N-T. No, sorry. So in any case, I'm not totally breaking rules, but I'm not sure if I'm supposed to put the brand anywhere. So, but no, really, really excited to be here. There were some things going on earlier in the conversations that I'm like, oh my gosh, we're going to talk about that in our panel too. So really, really thank you all for coming, and thank you for having me.
Great. Well, we're going to go ahead and jump in. So I think maybe a good baseline and to frame what we're going to be talking about today is when we say B2B and back office, I think if you asked all four of us, we might have a little different flavor of what that is. So we're just going to share some thoughts there. But one other thing as we're walking through that is also why, or is it fact or fiction that B2B trails consumer, meaning consumer can move quicker than B2B, and B2B is slower to adopt, or back office is slower to adopt. So, Tommy, I'll go ahead and hand it off to you for that question.
Right. I mean, I'm looking forward to our conversation here. As I was thinking about our preparations, I can think through payments, AvidXchange, of course, from a lending standpoint, capital market standpoint, through finance risk compliance in the banks today. All of these areas, there are critical back office elements that are beginning to embrace what I consider fintech in very meaningful ways to bring really just remarkable advances in the business. When I would say too, like I felt like when did the fintech age, as we think about it now, begin? And what was that moment? Was it PayPal going public? I don't know, but I'm gonna say I'm interested in the last, say, 10 years. And if we think of the last 10 years since 2008, was a lot of focus around consumer, but really in the last, I'd say 3 to 4 years, it's been this B2B zone that's really accelerated in terms of investment coming into the fintech space, is in terms of the really strong bank interest. Perhaps it was the banks and the large institutions feeling maybe slightly threatened or what's going on here, and then realizing there's some very meaningful enablement that can occur because of the pace of emerging technology, the pace of innovation that has been occurring in the fintech zone. So I'm just interested in us talking through that trend, if we agree with that.
I agree. Broadly speaking, we look at payments, lending, capital markets, and what I would consider CFO tech, which I think you equate to back office. I think all four buckets are incredibly important for any company you talk to, whether it's 5 people figuring out how they're going to make payroll based on the timing of their cash flow, or you're talking to Uber trying to get its drivers paid kind of around the world. So everyone's got their own challenges, I think, and we can certainly dive into each of those subsectors and talk about them at length. I think, is B2B behind? It depends on what you're talking about. So back office, I think, which is probably near and dear to Jay's heart here at Avid. I don't know the last time. It's always dangerous to ask a question you don't know the answer to, but how many people have walked into a supermarket and paid with a paper check? Odds are probably not. And yet 50% of businesses still pay invoices by paper check. So clearly that is very far behind, and something that got us excited about Avid and other opportunities around accounts receivable and accounts payable automation. On the flip side, if you think about consumer peer-to-peer remittances on cross-border, right? So sending money back to Mexico or Europe or wherever it is you're trying to send money, the experience for the consumer I actually think is worse than for a business. GE doesn't sit there, and GE is probably not the right example anymore. That was 5 years ago. Pick your example of company, Coca-Cola, they don't have a huge problem at the highest levels moving money across borders. That's just something that's been solved for them through kind of commercial services at the big banks, and something they can handle well. So I think the sort of broad blanket of fintech is always hard. It's kind of a tough lens to answer that question, but there are certainly areas in which businesses lag very far behind. And if anything, I personally believe they're better customers. You understand who they are, you understand their pain points, they have real budget to buy against needs, and so kind of the traditional rules of business begin to apply again, where you can really start to understand why is it that somebody would need this if it doesn't already exist? Why don't the banks offer it? Would they partner with it? Would they buy it? Would they try to kill it? You can start to answer a lot of the tougher questions.
Jay, if Jason can give me a sec, I went quick. I was sitting at the back table here earlier. I looked up, Business Insider came out with an article saying, okay, here's what we think the 25 unicorns are, fintech unicorns in the world right now, 25. And I did my kind of quick analysis against the 25, and 40% are what I consider B2B. And of the 25, 3 are in the Southeast, Avid being one of them, Green Sky being the other, and Cabbage being the third. I'm classifying Green Sky and Cabbage as B2B. And that means that 12% of the total are in the Southeast of the 25 global unicorns, which puts us on par with London and China, which is, I think, pretty remarkable. A good company, exactly.
I've heard of them.
Yeah.
So actually, I have to say, within about 30 seconds of me stopping what I said earlier, my phone started vibrating, so I'm pretty sure somebody told on me. No, so actually what I want to say really around this is that looking at the way I would sort of talk about the one main trend that I've seen as it pertains to this conversation in particular is that boring is sexy right now.
Right.
If I go on to our research website and I look at what the top search for terms are, it's stuff like, blockchain, distributed ledger, which, if you really start to unpack that. But, APIs, which I'm like, I think this is what I used to do 25 years ago when I was a developer. I mean, object-oriented design is all the rage, right? Robotic process automation. I mean, really, when I have had some of the executive meetings that I've had in the past where we bring a bunch in, kind of talk about stuff, a lot of it was how do we keep up with mobile and how do we do this and how do we, it was very sort of, front office type of stuff. It was very much about the presentation layer. And most of the stuff that I talk about now is middle to back office because it's not necessarily like we need to process optimize, but the things that are cool are really about streamlining those processes and kind of taking some of the standards maybe that you've seen, buy-in standards and those kinds of things, and actually putting them into process based on the new and sort of cool implementations and technologies that are out there. So yeah, I think overall, I would just say the trend that I see across banking, consumer, B2B, whatever you want to look at, is that right now, boring is kind of sexy. There's a lot of focus that's being put on some of those things.
So on that, you mentioned automation, process automation. Are those becoming table stakes at this point? So, you think of workflow, or you think of different routing engines that may be out there. Are those table stakes, and are banking, is that something banking needs to worry about, or can they rely on fintechs to help automate that?
I think, briefly, what I would say is the banks need to know what their own processes are. But in terms of where the automation comes in, a lot of times what I've seen is that there's a lot of kind of playing around with RPA in particular. But I don't think there's necessarily a clear cut, here is how it's being done in-house versus externally. I mean, it's really just a matter of can they clearly articulate what those processes are is kind of the first step. And then, what I talk to banks about is, all right, articulate those processes and then put a big M where it's manual. And that's really where sort of the opportunity is. So it may be less evident, I would say, to those outside the four walls, but I would also say that, the buy-in standards, which I mentioned, are entirely predicated on the fact that every bank does certain things in exactly the same way.
Right.
And really, maybe that's where there's opportunity for someone coming from the outside.
Yeah, and just one last thought on that is there's almost two prongs there, right? Because one could be back office for the bank, but then they also have their customers or consumers as well, right? That they're back office. And I guess it just comes down to who's going to own and solve which piece. So
yeah, I think that's a big question, right? Because historically, banks aren't software companies. They weren't. If you think about AP automation for Avid, banks themselves, 10 years ago, 15 years ago, they didn't have great solutions to help a business manage all the invoices, paper, fax, electronic, email, coming into their doors. They didn't have anything to solve that problem. They weren't trying to solve that problem. So third-party tech vendors, they get creative. People like Mike Prager decide and start a company that solves this issue for businesses. And from a bank's perspective, on day one, you say, okay, that's great. Like, this wasn't a problem we were solving anyway. To the extent that this is what companies want to use, we'll figure out how to work with them. And that's a good relationship at its start. The problem is going forward, as if you're Avid Exchange and you own every single invoice and bill that comes into a department, you understand, at least thinking about from a debits and credits perspective, what all the expenses are. You know kind of the timing of cash flow if you can get access to a bank account, which these banks, every bank now has, one form or another, has access to on behalf of, through these APIs, other third-party vendors. And so you start to think about things like supply chain finance, which has historically only been owned by banks. Now you have the system that actually knows more, in essence, than any one bank would know, because you see all the information in and out. So there's an asymmetric opportunity to figure out, were we pricing capital correctly for this business or not? And so you start to get into this world where, and I think rightfully so, Avid again as the example, KeyBank, Fifth Third, banks realize this. Yeah. And so they understand what they're best at, what their role to play in the ecosystem is. And they're not saying Avid's going to kill us. It's instead Avid's distribution for us. Avid has all this information. We can get smarter and better about how we work with our customers. And all the while, we still get to control the deposits and the movement of money, which is, at least for the time being, what they want, the business they want to be in. So back to the question, is it table stakes? We don't know. We don't know.
I think, Jay, that Avid, it's a really good example of kind of, to me, a bit of a tension between a fintech with a really transformative business approach, and you mentioned robotic process automation. Any group, any company could automate their accounts payable process using one of many of the fantastic automation tools that are available, or the RPA automation tools that are available in the marketplace today. The Blue Prism, Pega, many great ones out there. And then you have what Avid's done, which is really almost a full transformation of accounts payable and the ability to pull in the data. So it's almost, it's been great to see all of this, and there's been massive value unlocked and productivity created by the robotics process automation space going back, whatever we want to call it now, 5 or 6 years. And that's going to continue. And then it's creating now opportunities for those managers to look at, okay, there's now an opportunity to have a fintech that could really provide a more transformative opportunity that would then end up replacing the automation, perhaps, that got put in place, or it creates an opportunity for those that haven't done that to say, okay, maybe I don't use RPA, maybe I go to this fintech solution that has a very transformative, straightforward approach.
So Jordan, I want to touch on one thing that you mentioned I think is pretty interesting, is you mentioned distribution. So, and I think that what's interesting from a fintech perspective is, yes, that the fintechs may be able to help distribute some of the bank services, meaning going with one solution, but they have sort of a tool belt of many different offerings that bank wants to add. But from a fintech perspective, it's also the banking channel. If there are partners out there that can help distribute the fintech's product, it can truly be a win-win relationship in trying to create those bilateral and opportunities that are good fits. I think the interesting piece from a banking perspective is that it doesn't have to be one size fits all. There could be a small SMB solution, there could be a mid-market and an enterprise, and that doesn't have to be the same fintech. In fact, I would almost encourage that it not be, because then they're probably trying to serve too many markets with one solution. But I think the beauty of these relationships is with fintech partnering with banks, you have multiple options. So
maybe an oversimplification, but there's sort of 3 different types of fintechs across all the different buckets you can be building products. One is in the world of fintech, doing things that banks themselves don't do today or don't do well today, and they'll recognize that. So it's not you don't show up to the bank talking about how we can partner, and the people you're talking to are sitting there saying, well, if you're right, I'm going to lose my job. That's usually not a great way to kick off a relationship. There's a digital arm of a bank that maybe you can go talk to and you can have that conversation, but in general, if you're doing something the bank doesn't otherwise do, then they'll talk about how it is we can partner and work together, and I think AP is a great example. There's also fintechs that sell to banks that help with things banks view as table stakes, not because they're not important, but because they don't believe it's what differentiates themselves over time. And an example would be risk and compliance, right? If all the banks start messing up risk and compliance, it's bad for the industry, very expensive. Sure, you can make a business case around cutting costs in certain cases, around FCPA and KYC and AML and whatever you want to do. But banks are more receptive to understanding there are things like AI, and there are solutions out there that can get us smarter and better at the things that we're not doing today, again, for things we don't view as core competencies. And then there's the third fintech, which is like, you're going for the jugular. And there are companies that are doing it, and they're doing it well, but you don't see banks super receptive to partnering with them, and there's a reason for it. And how that all plays out, we'll see. Banks, they have to deal with regulation, tier 1 capital on the balance sheet. The idea that they're going to go buy a bunch of these people, we haven't seen it yet. There hasn't been too much of that. So who knows? But that's where I think if you start to think about your own product, if you're an entrepreneur and you're building a business, you try to put yourself in one of those 3 buckets, and it'll start to ask the question of like, doing something they're not doing, okay, that is about distribution. Doing something they don't view as critical to what they need to fortify as the base of their business, and we can just help them with processes, with compliance, great. If we want to go directly after them, it's a little bit of good luck from a partnership perspective.
So just kind of an observation from some of the things that's seen today, and actually I think it really triggered when you were talking, Jordan, that it seems like another trend is that it's fintechs now, across all 3 of those, have a much higher banking IQ than maybe they did a few years ago. So everything a few years ago was all, I'm going to do an app. Like it made me think about the early days of the internet where we had business partners coming to us and saying, we want you to build a website. Like, what do you want it to do? I don't know, I just need a website. So, I mean, that kind of felt like there was a lot of just throwing stuff against the wall. It seemed like, even 3 years ago when we started Finsider stuff of just, let's see what we can do. And now it really feels like it's almost a prerequisite that fintechs have to have at least a little bit of a banking IQ in order to be able to kind of puncture even any of those 3. So, I mean, I guess I'm just kind of thinking, is that, what do you guys think? Is that a fair observation, or is it still sort of an opportunity where people that don't really know banking can come in and change things, or?
Both. I'll cop out. I mean, on the consumer side, Simple gets started 6-7 years ago as the skin on top of a bank, and it took them 2 years to launch the product. And today, if you want to start basically a banking wrapper targeted at a certain group with a better application and a little gizmo or widget in terms of what makes it fun or gamified, you can get it going in 2 months. There are 10 different banks that are willing to work with you. They figured out how to open up their systems. They want the deposits anyway, so it just sort of works. So I guess, yes, in a lot of ways, somebody's got to kind of climb the barbed wire, and then everyone gets to go after that. And so
Right.
I think by category, you're seeing more and more banks comfortable with kind of opening up access to certain types of fintechs. And
Yeah.
I think
I'm thinking like Greenlight Financial, for instance.
perfect,
I mean,
yeah.
they've got if you're a parent in the room and you don't have Greenlight, you should get Greenlight on your app and get your kids involved with it. But they just closed a round. They just announced SunTrust and Ally as partners, and it's a great financial literacy kind of debit card for kids, which for a reason, there's nuances there in getting the value proposition right that have been hard, right? I think for the banks, there's been a couple of shots at that space, and here they come with something really more innovative and unique. It's been a good fit.
So, and then I'll pile on to my own question, actually, because Jay, you mentioned open banking at the beginning, and part of it too, what we've kind of seen is that banking acumen doesn't necessarily have to be homegrown within the fintechs. That's where some of these ecosystems are starting to come in, right? So open banking, a lot of times people talk about it being driven out of PSD2 and those types of things, but the concepts are really starting to work their way around the globe pretty quickly. So I was in Brazil talking about open banking a couple weeks ago. And so I think some of those opportunities to, instead of just focus on point solutions, start to bring in not just the technology, but the business acumen, and make it so that these front-end applications can tie into the back office stuff, is I think the thing that we're seeing the most. I'm certainly seeing the most questions around how do we get this particular piece on our mobile banking app that doesn't necessarily support it. And a lot of that's being driven, let's point to this ecosystem, have them do some pre-vetting, and then you can sort of do some of that stuff.
So maybe let's stop there for a minute, because it sort of leads into another question we talked about, and it's how are these fintechs or this segment, how is it affecting the business of banking? I think one that you mentioned is, if you think about open banking, you think about data flow, you think about back office systems. How are fintechs enabling this to happen and make it either easier or harder for the banks? I'll open that up to, I think all three of you can address that.
So, I mean, I think the one specific thing I would mention is that for some banks anyway, they are doubling down on what it means to be a bank, right? And so there was an earlier discussion in one of the panels of being a fast follower. Like, being a fast follower does not mean doing nothing. What it really means is still kind of, circle your wagons around where you can, improve the things where you can, and then you will be open to some of these opportunities. So I think there you can, and we have looked at things on a different spectrum of if you want to be really aggressive in the ecosystem space or not so aggressive. But ultimately, I think the one constant is, what does it mean to be a bank? What do you have to do to be a bank? And then where can you sort of layer on outside of that?
I'd say too, the fintechs are doing a better job than ever of showing up smart on reg and compliance, and knowing what, and being able to prove from the very first conversation, I understand the environment you're operating in. I know how to address whatever the relevant reg compliance items are to the business process that they have, and that makes a huge difference because. I think Tariq was making a joke about it earlier during his video. There is the long third-party vendor assessment cycle, and that the banks want to figure out how to shorten, and you only got a hope of getting some greater acceleration on that if a partner's coming to the table that is smart and ready and able to address those types of topics.
Yeah, and I think two other things. Banks have seen kind of other sectors go through material change, and to a lot of the bank's credits, they're trying to figure out how do we stay relevant, and again, where do we build, where do we partner, where do we buy? It's sort of reasonable questions. I think at least here in the U.S., it's been done against a backdrop with basically 10 years of no interest rates, although I guess subject to change. It has been changing a little bit, will change more, but I mean, so they got to figure out how to make money, and so take your pick. Trading was a big part of a lot of the big banks' desks over the last, going back kind of 5-10 years ago. It's become less prevalent, less volatility in the market. Reasons for that, but so I think they deserve a lot of credit in terms of adapting and changing. And I think as they've seen that buying software today isn't like buying software in the 90s. You don't have to buy a big package from IBM that's licensed and maintenance and on-prem. And as banks have gotten a little bit more comfortable with that dirty word SaaS and in the cloud, and I think they're starting to realize that actually we don't need a company to have $50 million on their balance sheet to be a relevant partner to us, and we don't have to worry whether or not they're going to exist in 6 to 12 months. And so I think the cycles are still long, but I think they're getting better, and I think banks are, to their credit, doing what they can to figure out, again, that key point of relevance.
I think you look too at some of these fintechs that have really been started and built by bankers, like Live Oak Ventures investment in Encino and right here in Wilmington. You look at the massive, and I guess full disclosure, Accenture is an investor in Encino. You look at just the incredible growth, and that is a commercial lending transformative platform built on top of Salesforce, and a lot of just they're having tremendous success, really transforming that whole function within a lot of really meaningfully sized institutions.
Well, and I think that's a good point. I think it'd be my opinion that over the last 2 to 3 years, you're starting to see banks warm up to fintechs, new technologies, and actually investing more into that. And Jordan, maybe I'll throw this one your way. As given your firm and your focus, what is what's exciting in the market today, or what is the investment? What's the economy look like in the investment for these types of companies?
Yeah, I mean, I joke, but I mean it seriously. I'm just looking for more avids. Yeah, I think B2B payments is still really interesting. Like that stat I quoted about paper checks, that's real, and actually it ticked up last year from the previous year. So we're going in the wrong direction, and it has to do with sort of lots of fragmentation on both sides, right? Different companies using different systems. They don't talk to each other. The payment itself is not that hard. Anyone can send an ACH payment, but wrapping the right amount in remittance data with that payment so that when it leaves the payable and gets received by the receivable, everyone has a sort of clear chain of command and custody in terms of exactly what happened and what was paid in a world where it's not a cash on delivery transaction, it's open invoices. And so we continue to think that's interesting. I think you'll see people go more vertical than horizontal over time. I think there's nuances to dealing with hospital systems and the payments they have to make and the bills they have to receive than versus, your typical marketing tech company that may be buying software as well. And so we're looking for things like that. On the payments, otherwise, spend a lot of time thinking about fraud and compliance, risk, fraud, and compliance around payments. So what data sets can be used to ensure that a payment actually is legit, the transaction should be paid and is real. If you're financing it, that the data being accepted by whatever the platform underwriting it is, if it's Cabbage or if it's take your pick, that stuff is super interesting to us as well. And then on the capital market side, when I was still at Bain, we invested in a company called IEX, but we continue to look for all different kinds of opportunities in capital markets. And I'm not going to open up the Bitcoin and digital currency gateway. I'm actually not a huge believer right this second, but I think the technology is real. But the whole idea that there will be more forms of electronic trading for all different types of liquid assets and illiquid assets, that keeps us busy, spending a bunch of time.
And I would say that the piece that I would really kind of hone in on that is that, there's a whole data conversation we can have as well, but around the payments piece, one thing that feels different for me on the B2B side is that there's been a lot of talk about real time and that kind of stuff. And part of the underlying way that we've talked about it has always been, well, okay, if you're talking about real time, how fast is fast enough? And then we start thinking about fraud and compliance, there's a counter question that not enough people ask, which is how fast is too fast? You still, we're going on the B2B side, you're going from, batch processing, and you got time to sort of dot your I's and cross your T's and all those types of things. But in the UK, they've been able to figure some of these things out, right? They're a little bit further on in the real-time payments piece. But to me, that's a big kind of area of how the consumer versus B2B space is a little bit different because they're going to, real-time transactional automation, and sometimes the whole thought of let's do this as quickly as I possibly can takes over, and then the risk really needs to sort of come back in.
Stating the obvious, the cost of getting it wrong is very different in the B2B world and the consumer world. So you mess up one of my payments from my bank account, not a big deal personal. You mess up a $10 million wire or whatever it may be, it's a big deal. So.
But a rich zone for fintech investment and success. There's these great companies that are building on their network technology, getting like 20 millisecond decisioning for fraud detection, and really taking a lot of the false positives and noise out of that the back office has got to deal with, and making a remarkable difference.
Yeah. The money laundering in particular is kind of interesting to me because that's where you really have those, one single transaction that goes wrong and, a financial institution can pay a pretty stiff fine for it. So that's again, on top of a lot of that. But you need all the data, right? You have to be able to ingest and collate and create sort of information out of data. And I think that's interesting. I tend to kind of shy away from some of the conversations around AI because I feel a lot of people are sort of misusing the term. It's like big data analytics was what we were talking about a few years ago, and now AI just seems to have replaced big data analytics in some ways.
Right.
And they don't do that correlation. They don't do the stuff underneath. And so I don't want to put the room to sleep, but I spend a lot of time on data governance lately as just kind of that, how do you start to organize and someone who can come along and ingest the data, organize it, and then actually turn it into information. That's compelling to me, not just somebody that's got a high-powered analytics engine on top of it that they've started to call AI.
Yeah, totally agree.
So are there, as we've talked about a number of things, from a back office point of view, when you think about emerging technologies, Jason, I'll start with you on this one. When you think about emerging technologies, you mentioned distributed ledger, you've mentioned a couple others, AI, robotics.
Right.
How do you start, when you look at that in the ecosystem of, what a back office can entail and what maybe they're doing manually or not today, how do you see, or what emerging technologies do you see that could make a difference?
So it's almost one of those things I want to start and say they're not really emerging in a way. I mean, and that's probably what I would start with too, that a lot of times we feel like there's this, blockchain is very different. Yeah, I mean, there's really a lot that you need to do to understand what blockchain is, much less how it can be applied, you know. But with a lot of these things, I've had some spirited debates internally of whether with RPA, like, does process automation really need the robotic part at the beginning of it? So I think really, in all seriousness, I would probably say, you know, there are capabilities within the four walls of, I would guess, every organization here that knows how to do these types of things. It's just where can you make the most impact initially, and it goes back, I think, to sort of that banking acumen piece, and that's not just, do I know what banking is, but do I know how I'm doing banking right now? There's a very, very kind of narrow slope of what it would take to apply a lot of these quote unquote emerging technologies. So I think it's just dive in where you can see that there's an opportunity for process change.
I think all these terms are nonsense, to be honest. I do. I'm also the person who stopped investing in the Valley in New York and come and hang out here with you guys. Yeah, they don't mean anything. They really don't. The rules of business always apply. You're going to build a company. You're going to have to solve a real problem. And most of the time when somebody walks into my office and they start with machine learning, AI, digital currency, or blockchain, A, they usually don't have anything. And then B, they're usually a technology looking for a problem, not a problem looking for a technology. Right. And so, like, what does it all mean? That doesn't mean I'm skeptical about the power of what AI or machine learning can mean for an individual or a particular company or product. The idea that we have access to more data than we've ever had before, the idea that we have access to quantum computers that can crunch and analyze this data in a way we've never seen before, all true, but then what's the commercial use case? Like, don't tell me AI, that doesn't mean anything. Tell me you can predict fraud in milliseconds versus minutes, and it doesn't take human heads going through a manual review queue to understand if it's really AML compliance or it's not, or, you know, but then talk to me about, okay, so where's the data coming from? And is the data proprietary, or are you just the analytics layer on top of the data? How clean is the data? Because garbage in is garbage out. Again, it's a little glib about it, but I don't think leading with that as what you're building or that's what the company is. Again, I just find most of the time it doesn't really mean anything. And so it's really about what are you solving, what's the problem, what's the issue, and how are you doing differentiated from anyone else?
I think building on that, ironically to me, the innovation engine of the back office is coming from the finance and risk area. And that's because there's all this, you know, regulatory burden, tons of people had to be thrown at it from 2001 until very recently. And so I find when there's great business case, you look, suspicious activity reporting. I mean, how many people are working on suspicious activity reports in this town right now? Somewhere, a lot. And there's some very meaningful, still, I mean, I think they're kind of coming beyond emerging technologies that can write those reports, have a machine do it off a set of structured data. Like Narrative Science, they're a graduate of our Fintech Innovation Lab. Love this company. Out of Chicago, and it's a natural language integration company, and you give them a structured data set, and they will create that narrative. What's the narrative in this business case? It's a suspicious activity report. Yeah. And so, great business case.
I think they're a perfect example. I think in the beginning, there were a lot of buzzwords, NLP, and they kind of got lost in the wilderness for a little while, and then I think when they finally honed in on, okay, these are the use cases when we talk to banks that they really understand, and the fact that we, like, throw NLP at them, like, they're kind of impressed. But what the bank really cares about is they get better results. It's faster, it's cheaper, it's better. And I think, again, business 101, that's just what works, that's what wins. And we haven't talked a lot about blockchain, but everyone comes in and talks about cross-border payments for blockchain. Right. Like, it'll be better. And, like, one time we sat some down, like, explain to us, like, where are you converting fiat to blockchain, to Bitcoin? How are you actually sending it across? How are you then converting Bitcoin back to fiat? And how much does each step cost? And you do it, and it's like, actually, no, this costs 50 basis points more. It may be faster, but it costs 50 basis points more for a company to use this than if they just, and then you get the answer, well, over time, this will happen, or people will actually pay with Bitcoin. You won't need to convert to fiat, and the price will come down. Like, that's great. And when that day comes, then this will be a very relevant solution because it will have been faster, better, cheaper.
I think I would say about the nonsense terms in particular, because believe me, that is like one of my big peeves. It was for the longest time, if anyone on a call said omni-channel, my IM would start to blow up because all of my colleagues knew that I hated the term. And part of it was just because these terms become popular and you're like, okay, I'm going to get involved in this type of conversation. But then to your point, there's so much vaporware behind it that it's kind of like, all right, you start to lose faith in sort of the terms either because you don't interpret them in the same way or because there's really nothing behind it. I mean, honestly, blockchain's a great example in a way of, do you all think we would be talking about blockchain that much if everyone still called it distributed ledger? Like you'd be like, no way, I'm not talking. So I mean, there's power in the words, and I think what I would say in terms of where that is useful now is that if you kind of put your product forth and say, it's AI, it's blockchain, there's some, there's definitely some ability to kind of drive conversations that way. And in terms of the emerging technologies that we're talking about, RPA, if you can get an executive excited about RPA, about process automation, just by putting the word robotic there, that's good. That really is good. When I said, that boring is sexy right now, APIs and RPA and a whole host of other acronyms, I mean, if you can get someone excited about doing all of the boring stuff that you knew had to be addressed for the last 30 years, and now it's like top of mind because someone created an acronym, I mean, that's good. It just, you can't have the vapor behind it because then all of a sudden we'll be talking about what a bust RPA was 2 years from now because there wasn't really anything really truly kind of behind the scenes.
Right. Well, 2019 could be a big year in terms of blockchain related to the back office because Australian Stock Exchange has announced they're going to convert that CHESS, their equities system, over on digital asset holdings technology in Q1 or Q2 of 2019. And if that is successful, that it's kind of addressing this big problem in cap markets, back office is reconciliation, I guess is the essence of it. Can I take all this consuming time and effort out of reconciliation? So lots of eyes on, I think that program, and then I think we continue to see DTCCs saying, or Depository Trust Clearing Corp, also trying to really think very deliberately and carefully through can we reduce reconciliation effort overhead massively by using the blockchain technology, and they're continuing to kind of very methodically try to address that problem with all of the various member institutions.
I don't disagree. I just think when that day comes, we're not going to call it blockchain anymore. We're not going to care. We don't have to call it blockchain. We're just going to automate it. We're going to talk about digital asset holdings as a great company because they solved a ton of problems, and the protocol that sits underneath the commercial layer that everyone interacts with. Like, everyone uses the example, but it's true. It's like, what protocol is your email written on? You don't care. Your email works, and so that's why you use it. And that's the only frustration. The idea of an indelible distributed ledger to be able to adapt to an internet world where you can start to move what's otherwise been tangible or lack of liquidity assets, or and take your pick. It could be stock markets, it could be titles, it could be property, you name it. There's a lot of use cases we could all spit here and have a hypothesis about. But I think ultimately, again, when blockchain or digital currencies become so ubiquitous to everything we're doing, we're really going to stop calling it that. And we're going to get back to talking about what it is people have built, because it's going to be amazing and impressive in the Revolution 3.0 internet age. So that's just my 2 cents. Bye.
So with that, we'll wrap up. We'll do a little bit of a lightning round, maybe looking at the time here. Given the audience we have today from financial professionals in the room, ranging from people who've been with banks for many years to entrepreneurs that are going to be demoing here in a few minutes, what are either trends or advice that you may have for the audience today, or any upcoming trends you might look for in 2019, as you mentioned, or beyond? And Tommy, I'll start with you.
I think, I don't know if it's a trend, but it's just the advice would be, do your homework and spend time with a lot of bankers in testing out, is the whatever you're offering a fit for a specific business solution, real strong either pain point or business opportunity from the back office space. And I guess to give an example, I've been learned of this company recently called Built out of Nashville. It's a construction drawdown loans. Who thinks about construction drawdowns? Well, it's a mess. It's all email driven. It's just a disaster needing to get fixed, and they've come up with a great mobile solution, and check them out. They're like, whoa, really getting a lot of major growth.
Jordan?
I love what's going on here in Charlotte. I think it's awesome. I think this market should be one of the fintech winners to emerge in North America. And I don't think you can be all things to all people, but I actually think Charlotte has a real right to do so, right? You have the legacy of financial institutions here. You have incredibly strong education in the state, and good cost of living, and just a community that feels like it's all pulling for each other. And I think economies don't just change overnight. It's a gradual shift, but I think you can feel like a real commitment to this market from kind of all the different constituents that I've talked to. And I'd say, cliche, but keep paying it forward. Mike Prager and the Avids of the world, I know they give back to the community, and other people that have had success as entrepreneurs. Like, to make an entire ecosystem go, it takes a village, right? So, for the bankers in the room, obviously you're here, you're focused on these types of issues. You want to stay relevant. You want to make sure, you're embracing and adopting technology to the best of your ability and to the banks, and it's all part of the equation. And so I think this event's incredible. So kudos to you and everyone else who hosted it. And I think continuing to focus on making this community really special from a fintech angle is doable, and I look forward to what's to come.
And I would just say the thing that I see a lot is that it's easy to adopt, it's hard to change. So if you're looking at replacing something, you have to consider what's the risk, what's the cost of replacement, rather than just look how much better this is. I think that's one thing. We could talk about blockchain all day on that sometimes. And I think if you are looking to make some sort of an update, that's something that you probably need to keep top of mind. Is this a net new? Your path is going to be a lot shorter if it's something that's brand new. If you're looking at replacement, which a lot of times we are, where I think that really gets hung up is not necessarily just showing the value and how this is better than what's there now, but also having some sort of a retirement plan for what's there, or being able to articulate that not only is it better, but it is X better, that actually means that you should go forward and do this, rather than just it might be a little bit better, but you're going to have to go through this pain.
Great. With that, we are out of time, but I want to thank Tommy, Jordan, and Jason for making the trip in and being a part of this panel today. Thank you very much.
Thank you all.
Thanks.